Hello, dear friends. Today is Friday, January 24. Let's take a closer look at the charts for the euro and the British pound and explore some potential predictions. Yesterday, both the euro and the pound sterling saw gains, driven by remarks from US President Donald Trump. He called on OPEC and Saudi Arabia to bring down oil prices, which exerted downward pressure on them. In addition, Trump reiterated his threat to impose tariffs on the European Union, Canada, China, and Russia. He also advocated for lower interest rates, suggesting that the current state of the US economy allows for further monetary policy easing. These statements were a key factor in the dollar's decline, helping risky assets to gain ground. As for latest economic data, the number of Americans filing for first-time unemployment benefits rose to 223,000, slightly exceeding economists' expectations of 220,000. Now let's dive into today's macroeconomic calendar, which includes business activity data from several Eurozone member states. The French and German PMIs are expected to indicate somewhat negative conditions. While Germany's services PMI remains above the 50-point mark, its manufacturing sector continues to contract steadily. Overall, services activity in the Eurozone is in expansion territory, with the PMI staying above the 50 threshold. However, manufacturing activity remains in contraction and the composite PMI is hovering around the 50-point mark, slightly below it. The situation in the UK is similar. The country continues to face challenges in its manufacturing sector, while the services sector remains the primary driver of economic growth. Despite this, the UK's composite PMI remains above the 50-point mark. As a result, positive data could support further gains in the British pound. In addition, ECB President Christine Lagarde is scheduled to speak today. In her most recent comments, she emphasized that ECB policymakers will keep lowering interest rates to bring inflation back to the 2% target, so it is unlikely that she will introduce anything new in today's remarks. Turning to US statistics, it is worth paying attention to the manufacturing, services, and composite PMIs. The U.S. manufacturing index remains in negative territory, signaling contraction in the sector. However, the services sector is performing well, with the PMI expected to come in at 56.8. The composite PMI is forecast to be 55.4, further confirming the resilience of the U.S. economy despite challenges in manufacturing. Furthermore, traders may take notice of the University of Michigan's Consumer Sentiment Index, which is expected to remain steady at 73.2 in January. Therefore, this report is unlikely to significantly influence market sentiment. From a technical perspective, the 1-hour EUR USD chart shows that a false breakout at 1.0454 will trigger a sell signal, potentially pushing the euro down to 0.414, which represents the midpoint of new sideways range. If the price breaks through and fixes below this mark, the European currency could extend losses to 0.375 and lower boundary of the range, with a possible move towards 0.343. At this level, I recommend going long on a rebound to catch an intraday correction of 30-35 pips. Long positions at 1.0414 and 0.375 are viable on the false breakout. Alternatively, if the price breaks through 0.454 and consolidates above it, the euro could rise to 0.496 and potentially 0.534. At this mark, it would be wise to go short on a rebound in anticipation of a 30-35p move. Going short at 0.496 and 0.454 will only be relevant on the false breakout. As for the British pound, those looking for buy signals, anticipating a continued bullish run that began on January 13, may consider entering the market on a false breakout at 23.70. With strong data on UK services and manufacturing activity, this could propel sterling higher to 24.12. If the price breaks through and consolidates above this level, sterling could extend gains to 1.2449 and even 24.90. At these mark, traders are advised to go short on the rebound, expecting a 35-40 pip decline. Short positions at 24.12 and 24.49 can be opened on the false breakout. The targets will be 23.70, 23.36 and possibly 23.01, which marks the lower boundary of the ascending channel. At this level, I recommend going long on a rebound, aiming for an intraday correction of 35-40 pips. Long positions at 1.2336 and 23.70 should only be considered in a case of a false breakout. Best of luck, have a nice weekend.